And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Prep. This is day 2, really, of our new production system, and we're going to make things happen as good as they can. It is Thursday, May the 11th. My name is John Hoagland. Thanks for trusting us with your time. Good morning, my good friend Jack. How are you doing today?
Hello, everybody. I'm Jack Pelzer. Hoag, you have a new router apparently from this century this time, so we're going to try and make it work. So,
yes.
Man.
Unfortunately, there were 2 people not of this century trying to hook the router up, so it took a little bit more time than usual, I think.
Yes. You had an older Comcast gentleman, I take it?
Yes, me.
Perfect.
So, well, it seems to be working and everything's back in order, so we'll take care of the market prep here this morning. We're going to be doing the Make Hoag Money old school, so we'll end this stream and do it the old way, so we'll be able to see everybody in Zoom and on the YouTube side. But for the market prep here this morning, we are always going to be focusing on context, good risk management, and patience. I have not traded this week, somewhat by choice and somewhat by internet, but I don't feel bad about it. I'm feeling like this is maybe a good day to start the week trading, right?
I thought that was a good social media post you did this morning, Hoag, about how, you weren't having that FOMO. The internet wasn't there. You didn't do it. But with CPI being yesterday, earlier this week, we're just kind of looking at ranges going into it anyway. And now the info's out, and we'll see what we do next.
All right. Well, let's take a look at what we're looking at. Of course, at about 8:16 this morning, the FDIC made an announcement on the deposit insurance fund. They said they're going to be making an announcement. So that jarred things around a little bit here as far as the markets are concerned. But the PPI numbers came out a little bit lower than expected. I don't see any huge reaction in the equities or pretty much any of these markets from those numbers. The initial jobless claims came out higher than expected. Apparently the highest level since October. They were looking for 245,000 new initial jobless claims. It came out 264,000. So a little bit of a high number there for us. The continuing jobless claims were a little bit lower than they were expecting. At 7:45 this morning, as we start this market prep, Kashkari is speaking, 9:15, Waller is speaking, and that's the only talking Feds that I see on the schedule for this morning. As far as the U.S. stock index futures, we're steady here. We're going to be looking for, new information. I mean, it seems like the S&Ps are stuck in the mud. They're not really doing much. We've got the NASDAQ looking like the strongest of the 3 amigos. So we got investors seeking any news. And I think a lot of that is going to be, as the debt ceiling threat becomes nearer and nearer, that's going to be more and more of a focus, with negotiations moving slowly in that regard, if at all, both sides blaming the others as usual. And Yellen has been yelling.
Good.
And she's, yeah, I know, right? She says there are dreadful consequences. The impasse hinges really on the spending side of things. They probably a good idea to rein in some of the spending that's been going on. Jamie Dimon agrees with Chairman Yellen that this could be something that could be very bad. Of course, we're all well aware of that. She doesn't need to keep pointing that out, nor does Jamie. So crude prices remain sticky. after a kind of a disappointing breakout to the upside. It does not seem to be providing good opportunities. So we're going to change that trend line a little bit. We'll take a look at that shortly. As far as the VIX open at the dollar index and the 10-year yield, VIX up a little bit at 17.18. Dollar index 108.81, yield on the 10-year 3.37%, a little lower than it has been of late. And as always, we ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel. You get notifications when we do go live. And it's good to see everybody again. Will R. I appreciate that, Will. JD, good morning. Jay, good morning. The Jays are the early birds. Laura, good to see you. My brother, good to see you. Love you. Charles March, good morning. Kevin, thanks for the information you send me. Kevin, very much appreciated. Sarah Hall, prayers and love to you. Shaw, good morning. Lacey says good morning as well. I did not have to hack into my neighbor's Wi-Fi. That's a good thing.
That he's told us so far.
What's that?
Yeah, that you've told us so far about your neighbor's Wi-Fi.
Right. Well, hopefully they don't notice while we're in this prep here. John, good morning. Brian, yes, gremlins have been banished. Where'd he go? I got him. Here he is. He's mine now.
Impressive.
Yes. Bill, good morning. Chad, Henry, Anissa, good morning. Rooster, I heard a rumor you're getting funded. Congratulations.
Very nice.
Mr. Harrison, it's good to see you. Mr. Harrison pointed out something in the S&Ps that there is an island low, but how important is that island low? I was going to talk about that a little bit this morning here, Mr. Harrison. Wait a minute, I got lost. There we
Lost
go.
in the chat there, Hogue. I just want to make sure we're not running into more internet problems.
No, lost in the chat. Much happier about the shirt. Will, Rusty Golfer, Scott. If I missed somebody, I apologize. It's great to be back, Stephen. George Duquet, good morning. JT, good morning to you. And Bluebell, Naztec, Charles E. Shy, Scott Shaw, and he conquered. Dennis, good morning. Trading Futures Daily, good morning. Trading for Animals. It's day to make Hogue money. Yes, we will be doing that. Don Clemens, normal Zoom. Yes, there is. Dan, good morning. Shane HPAC, Alejandro, Dan, Jeremy, Joe, good morning. Peaceful. Joe is feeling peaceful this morning. Good to know. Mike, Vince, good morning. Elliot, Tim, HPAC, Sarah. Congrats, Rooster. Of course. Absolutely. All right. All right. Well, what are you thinking there, Jack?
I'm just looking at the, when we get into the charts, the ES right now is that you're right in that after the CPI number, we're waiting for more information. We've had a pretty strong, uptrend going back to October, but that 4,200, that, as we call it in the biz, the BFRN, which stands for what, Hogue?
Big fat round number.
Yes, with fat, right? Not the other F word that sometimes goes in there.
Right.
But the compounding that, not only is that a big fat round number, but also we have, it's been touched about 3 times and bounced off it every time.
Mm-hmm.
I think the rubber is about to hit the road there. You mentioned the jobless claims. That's kind of what they want to see. Higher jobless claims isn't necessarily a bad thing given what the Fed's trying to do.
100%.
Jerome Powell will like that one.
Yes. Yeah. So, we'll have to see how they digest that. I think a lot of folks are, and I myself included, are looking forward to a little bit of break and rate hikes, right?
Yeah, I definitely am.
All right. Shall we dive into the charts?
If producer Holden will allow us to. Holden? Shortly, this is the show business here. Oh, Hulk, you have to share your charts. See, This is, by the way, guys, this is why we're testing this new stuff here. I think that ultimately it'll be a lot easier to watch despite our faces and stuff like that. I think it'll be cleaner. But we got some stuff on the back end. So Hoag's going to share his charts real quick and we'll dive in.
Here we go. There we got him. All right.
Beautiful chart. Beautiful chart.
Excellent. So hang on here. There we go. All right. So now we've got things going on. All right. So this is the mini S&Ps. Got to put my glasses on so I can see my own handwriting here from my notes this morning. When I look at this, I just see balance. I'm like, what is this market attempting to do? It's attempting to do nothing. We're right where we were a month ago. And we've kind of put in that 4,200 BFRN, the 4,100, 4,080 BFRN, and we're just kind of stuck here in the middle. Yesterday, we did add volume. We did, well, of course, because we had the CPI numbers. We did add a little bit of open interest, 7,900. That seems to be a bit of a trend in the last few sessions. We've been adding open interest. So that tells me that there's some energy coming into this market, but direction is unknown. I mean, we're right in the middle of balance where we have been, in essence, all week long. We had some auctions to the upside, the auctions to the downside yesterday. None of them were very successful. So we're going to sit here range bound for the time being. Is it short time frame control with the increase in open interest? It can be, some longer term speculators. Is there any big participation from longer time frame traders? I haven't been able to see it. I didn't really see pretty much see anything yesterday, but just in looking at the numbers and looking at where the market has been trying to go, it's been trying to go nowhere.
I think we can expect more of this until the debt ceiling stuff is resolved. We've been told that that's going to be the next week or two. So I don't know. If I was a huge player, I would not be trying right now to plow, way higher or way lower, not knowing what that's going to be.
100%. I mean, we don't know what's going to happen. So if I've got big stakes in this market, I am hedged and being patient and waiting. Right. The NASDAQ's a little bit of a different story, but we'll take a look at that here shortly. Here's the 30-minute chart. So here's the number comes out. We run higher, we run lower, we close somewhere in the middle. It was an unsuccessful probe to the upside, an unsuccessful probe to the downside. The market remains range bound. Overnight inventory, not really. Inside the value area, as I always do suggest, stay patient because better trade locations have a tendency to come later on in the session when we open in range and value. It's a very toothy volume profile here from yesterday, which kind of lends itself towards a little bit of balance. And you can see we've spent a little bit of time in this low volume node, just kind of bouncing back and forth here. We did have the FDIC announced that they're going to be making an announcement at some point today. So that knocked us around a little bit, and no real major reaction to the jobless claims nor the PPI numbers today. So here we go, just sitting, looking at each other going, now what? So maybe there's a little bit of repair that might happen for lack of anything else to do here in the S&Ps. Here's the TPO chart. So the initial balance is the extreme high of the regular trading hour session. That was that spike, and then when it came off in the regular trading hours after the number came out. So it's a normal variation trading day, relatively even bell curve. Point of control centrally located, a neutral normal variation day. Overnight, near point of control, overnight high, near the high from yesterday. Price inside value, stay patient. It's not a very strong low. There's a degree of excess, but it's low excess. And as we were talking about, was it Mr. Harrison? I'm trying to remember. I'm a little goofy sometimes. Yes, Mr. Harrison pointed out this is an island low, which is usually a pretty strong reversal pattern. It would be much more important had it happened down here.
Mhm.
Right? So the fact that we're range bound kind of takes a little bit of the sting away from an island low or an island top. Although it did put in the low, we did rally. We haven't even returned to close the gap there. So there is kind of an upside hint to that, but I'm not really going to be looking for anything huge until, again, we can re-accept above that 4,200 level, which I don't see happening until something changes. So again, stay patient and look for better trade locations as the day goes on. Whenever the market opens in range and in value, that's what I tend to do, and hopefully it'll pay off. So here's our trend line. We looked at a breakout of it a couple of days ago, and it really just did not perform all that well, did it? It's coming into rollover. That's one issue. The technical breakout was a disappointment yesterday or the day before. This was on the close when it closed above it. And then we didn't really do much yesterday. Well, we had an increase in inventory in the US. I think it was around 2 million to 3 million by the EIA. It doesn't really matter all that much. So we have a kind of a failed breakout here. What I'm going to do is I'm going to take this trend line and I'm going to move it up here, because now instead of 6 points of contact, we still have 3. So we'll see what happens on that. What are we doing today? Here's the 30-minute chart. Market has opened. It does have a little bit of overnight inventory to the short side. And it looks like we're rejecting range from yesterday. And we've got a one-time framing activity thing going on here since 4:30 this morning. I'm not going to fight this. I need to find some sort of structure before I'm going to be looking for any kind of longs. And again, we did fail that that potential breakout above that trend line. When we fail those, we tend to go the other direction. TPO chart here. So excess high, IB high in the regular trading hours. Normal variation trading day, neutral stance. Do we have a gap here? We have a 1 tick gap.
I think it's a good point there in the oil hogue. By the way, the screen's a little bit blurry, and I was typing in the chat comments over there, but I presume this was an oil chart you were looking at.
Yes.
Yeah, that you weren't going to go in and buy it right away, even though it was at that level where it reversed before, I believe, from yesterday, if I'm reading the chart right, that you're just still waiting for it.
Yes.
Because I know a lot of people starting out will just kind of, it's at there, time to go. Let's do it.
Let's jump in.
Let's do it. Get that oil moving. Let's save this economy.
And again, we do have an island low here as well. This is our island low. This is a more important reversal level. Looks like we may go back and test that or refill that gap. NASDAQ. All right, the NASDAQ, a whole different story. Similar asset class to the S&Ps, but again, telling a different story. Last week's high is going to be somewhat pivotal for me today, at least if I were going to be trading the NASDAQ. NASDAQ gives me heart palpitations. So last week's high here, tested it Monday, Tuesday, Wednesday. We broke out above it and closed. We're holding and attempting to continue this move to the upside. Did we bring in any open interest yesterday on this breakout? We did. And on decent volume as well. But the volume, I'm sure, was largely, created by the CPI number that came out yesterday. That was really kind of a nothing burger, but it did spike volume a little bit. New York Stock Exchange did about 4 billion shares yesterday.
What's interesting there on that hogue yesterday on the CPI? I saw a thing come out before it from JP Morgan where they had the scenarios. And for the 4.7 to 4.9 or whatever where it ended up, they said there's a 20% chance of it or something like that. So at least it wasn't the bad stuff, but also they kind of had pretty much the exact moves down there. So they said if it was in that range, the market would jump between 1% and 1.25%.
Huh.
And lo and behold, it did. So I might be looking at those predictions before the new numbers.
Yeah, right. Right.
Yeah.
I wish I could do that.
Well, then you'd be making Jamie Diamond bucks, wouldn't you?
Yeah. Well, and who would want that, huh?
Yeah, that would suck.
All right. So, um, where were we? Oh yeah, the potential breakout to the upside. So it was good volume, good open interest. We did add 4,800 in open interest. That's pretty substantial for the NASDAQ. So what we're doing now is we're monitoring for acceptance above last week's high. Here's the 30-minute chart. So here's last week's high. We did close above it. We held above it. If we're holding any open interest, any overnight inventory, I should say, I don't think we are. I think we're largely pretty much flat from overnight. We are looking like we're going to open above value from yesterday. No gap, which I'm kind of hoping for if we're looking for a move to the upside. But what I think we'll be looking for early in this session today is to find reacceptance inside value, possibly for a test down to last week's high. If we do get back into value, there is the chance that we could trade to the other extreme of value, even though this is not a true value area special situation, right? We got to open outside range to really try and get to the value area special situation play. So we're going to watch here our overnight low, kind of an important level, and at the very least, it offers us the opportunity to limit risk in either direction. Truly, here's the TPO chart. Normal variation trading day, unsuccessful auctions in both directions. The market kind of holding here near the high. Our overnight low here we just discussed as kind of a cool looking level. It's kind of the M period low here. Low excess high, low excess low. You know, we open back in value. Try and stay patient. I say that all the time, and you guys probably get tired of hearing it, but it's just so important to it's such an important part of the context to me. If we open in balance or in value, there's very little change in the perception of value, which is really the definition of price is the collective perception of value. Whatever the price currently is, it is where traders agree to transact, and that is the perception of value. And I say perception because quite often value can be pretty far away from actual true value, and that's sometimes when we have these big directional moves, when the market goes from balance to imbalance to directional. That is a usually a quick change in the perception of value. So again, try and stay patient. Unsuccessful but finished auctions in both directions yesterday. Here's gold. So upside move, digestion. We've got balance and another balance stacked on top of it. If we were too long or too short on the way up here, this area here has done a good job of evening inventories. We added 5,900 in open interest yesterday on an overlapping to higher day. We'll take a look at kind of direction. This week, yesterday, we had an attempt at weekly kickoff high, came within 2 points of it, $2, 20 ticks away from it, and then rejected. I'm going to be looking at this open interest increase as new shorts against that level, possibly in longer time frame. That's going to put new shorts against, shorter time frame new longs. What do retail and short time frame traders do? They buy the high and they sell the low. It doesn't mean they're all going to be losses because we're very nimble. If we buy the high, we can be out of it very quickly. Here's the 30-minute chart. No real overnight inventory. the overnight high and low, very close to value high and low, and there's that perception of value. There's very little change in the perception of value of an ounce of gold at this time. We're going to be, we opened in range and in value. This was I think the move when the FDIC had their announcement that they're going to have an announcement. Love that. Hey, we're going to announce that we're going to have an announcement later on.
That's some real middle management stuff right there. Just a meeting for another meeting, right?
Absolutely, yes. Let's set a meeting to set another meeting and have a meeting. So here we are, range, value, stay patient. TPO charts, narrow, in range, in value. Better trade locations are likely to come as the day goes on. Just because of that perception of value. Euro. What's the dollar doing? Dollar's up 1/3%. Maybe a potential market state break here. Upside digestion break. Let's take a look at the 30. When we opened, we're holding some shorts here. We've probably done a good job of reconciling some of those shorts down here. The FDIC number came out. We popped right to last week's low and right back down below weekly kickoff low. This level right here is, again, another area where I'm looking for the longer time frame traders of the euro to adjust inventory. If they do, that can provide powerful moves. Don't forget, sometimes it takes some time for them to make that decision. Sometimes they can become magnetic, but this one looks like a little bit repulsive to the downside. It's repulsive. Take a look at the TPO chart. Gap? No, gap close, just right to it. Yesterday, we have a kind of a poor high. We had excess low opening below this excess low and not coming back into range. Says something. Remember, what doesn't happen is equally, if not more important than what actually does happen. We did not go back into the range at all from yesterday after putting up a weak high. Market may be a little bit weaker than we're expecting. So if I'm looking for anything, I'm looking for opportunities to get to short, possibly against that weekly kickoff low, which that number is 10960, 0960. Because at the very least, it lets me limit my risk. If we get back too far above it without some sort of impetus from news, then it might be a good opportunity for us. Here's the 10-year. Jack,
yes.
This is your specialty.
Yes, my old lover, the bond futures. We're seeing obviously a big rally right now in ZN. As I'm looking at, the yields have been compressing quite a bit. I think that this is probably the same story as the ES in that this is so dependent on what the Fed's doing that, it's going to be in a rage until especially when they figure out this debt ceiling thing, right? Because, once again, I wouldn't want to make a huge yield bet when the U.S. might default on its debt.
Right.
So I would follow the patterns, but be careful. Let me take a look at my chart on that real quick because it's clear on this end here. As I recall, it's been pretty range bound going back to really going back to the
March.
March. Oh yeah, that is really tight. Sorry, I gotta zoom in even further.
Mm-hmm.
I mean, that's your ball game there. Just let me go to the yields on it. It's just been bouncing back and forth between 3.5, 3.6, bottom end there. I mean, that's your range. That's a pretty good ranging market if you want to experiment with the bonds, but I would probably hold off on getting into that for the first time until about 2 weeks from now, right? When they solve that stuff. And by solve, I mean solve very
loosely.
loosely.
Yeah. Yeah. Well, it looks like, I mean, we're getting up to the upper extreme of price here. Weekly kickoff high 116 and 1830 seconds. It's getting pretty close to possible a decent daytime frame trade. Looking at the yield curve, I mean, it's completely the opposite of what it was a year ago.
Yeah.
I mean, the 10-year, it's starting to kind of look a little better further out, but the short-term yields are so strong, and this is just a big sign of potential recession. So anyways, on this daily, we're getting pretty close to an important inflection level, that weekly kickoff high here. We added 59,000 open interest yesterday, which sounds like a lot, but when there's 4 million in open interest, it's not that big. It's bigger than we've seen lately. I'm calling it a hopeful increase in open interest and a hopeful increase in volume, which has been very short, very small of late. Take a look at the 30-minute chart here. So continuation to the upside yesterday. There was a pretty good add of open interest. If there was longer time frame in there, they've accumulated some new positions to the upside, and we can tell that because it's an additional, an addition in open interest. If we'd lost open interest yesterday, I would call that a kind of a short covering rally, even though this is a P-shaped profile. The 730 numbers were the ones that really knocked this market to the upside. And then it was just a good grind to the upside with an increase in open interest. That's toothy, right? So overnight inventory, we got a little bit long, but we're seeing continuation. If I'm trading this market, I'm kind of sharpening my knife here and getting my fork ready to see if there's any lunkers up here. You may find a sturgeon or a huge tuna up here somewhere, if that is the opportunity you're looking for. So getting pretty close to that kickoff level. It is largely based on this naked point of control, volume point of control, because there's nothing left above it. So we're going to see how this plays out. Yesterday, excess low excess high, gap, and go up towards resistance. It might be an interesting day, even if you don't trade the 10-year, just to watch.
Yeah, and I have no problem with people taking either side of that trade there. But if you're trying to trade the breakout, you hold that MFer, right? I mean, there's not a lot of stuff below there. So that's high risk trade. Make it a high reward trade if you're going to do it. Don't second guess yourself on that. One other thing I wanted to say, just as long as people are here giving feedback, is I do have access. So like we have the sort of aggregate position. So we never do this for a single person, but aggregate positions for people either in the trading combine or in XFAs as sort of what Top Step traders are thinking. Would people be interested in us sharing that from time to time? Just something to think about.
All right. Thank you, Jack. I know I'm interested.
Well, I can give you, this is a taste because it's good and most of the people are out, but it looked like everyone was pretty short ES. And sorry, I was like, why was our volume so low in the NQ? It's because I put in the wrong ticker. Everyone was, not everyone, but the aggregate was short NQ and ES pretty good this morning and got paid, it looks like, on that move. Now, that obviously isn't always the case. I think this is sometimes most helpful when you see like, yikes, everybody is short or everybody's long. That can be trouble. Cool. Well, if you guys are interested in that, let me get it refined a little bit so that I know exactly what I am telling you, because I need some familiarity with this platform here. But yeah, that'd be cool. Well, good fun Top Step position party.
There you go. Last thing we're going to take a brief look at is the natural gas. It's been a fascinating market, but It's 3 days in balance. We added 12,000 open interest on this push to the downside. Overall, the hue to this market is to the downside. 30-minute chart. Range bound relatively. I'm going to watch the overnight low and the overnight high initially for opportunities here, because it's the only thing I can see here that's going to help me limit my risk. And here's the EPO chart. Inside the range, inside value. Let's chill. All right. We're going to move on to Make Hope Money. I'll get the stream set up. I'll get the Zoom set up. Jack.
Yeah, I'll drop out here. Just wanted to say, I think that your internet worked great, and that made my life easier. Because,
excellent. Not bad for an old guy, huh?
Yeah, you can teach him new tricks out here. So thanks, Hogue. We'll do this again.
Yes. Well, I will see you soon. Everybody, take your deep breath. Stay humble, grateful, creative, and centered in your trading today. We'll see you in just a couple of minutes for Make Hope Money. If I don't see you there, have a great trading day, and I will look forward to presenting a reflection at the end of the day today. I think I got some time at the end of the day, so we're going to try and do that, and I will look forward to seeing you.
Namaste.
Great day. Be kind to each other. Be kind to yourself. Pray for peace. We'll see you later.